There we go. So yes, we are live, and Regina, I thank you for the opportunity to talk with you today about renovation lending. As we discussed before we went live here, this presentation typically takes about 60 minutes, and it's intended to be an interactive presentation that we do. And with this specific presentation that you and I are doing today, we're recording it, and our goal is to be able to share this with other people that would be interested in knowing more about renovation financing. So we'll record this here today, and then what we'll look to do is get the material out, and then we'll schedule a follow-up presentation that'll be more geared toward a Q&A, and might not go as long, but um, we'll just get started, okay? So as you can see on the first slide here, my name's Jonas Beyer. I'm part of the Beyer Group here at Guaranteed Rate, and I've got two other people that are part of our team. Jesse Beyer, which if you're trying to figure out, are we twins? Yes, we are. I'm on the left. He's in the middle. uh, Jesse is the branch manager, and he heads up the renovation team for us. Julie Wallach, she's on our team as well. We're all originators, and she's based out of California. Jesse and I are out of the Chicagoland area. We're licensed in a multitude of states here. And what we do for Guaranteed Rate is we are one of three regional, what we call pods, renovation pods. We do all of our own business, but we also support the other loan officers or vice presidents, we're called here at Guaranteed Rate, with their renovation business. So the model that we have is people that do not do renovation frequently, they don't want them to try to figure it out. It is a different animal, and it can be challenging at times, especially if you don't know the guidelines or you don't know how the process and flow works. So they refer that over to us. We close their business for them, and they can continue to do what they do well. So, and Regina, I don't know if everyone is going to know who you are that would hear this deck, but I don't know if you want to take a minute or two to talk a little bit about yourself or the group in which you want this presentation to be heard for. Okay. Yep. Perfect. Okay. So let's jump into this. Let me move this over here. Okay. So spend less time looking for the perfect house and turn the home that you find into what would be your buyer's dream home. So this is what you can dream up. And I tell people with the renovation loan, we can basically take anything down to studs and rebuild it up as long as it qualifies for the buyer and for the loan type that we're doing. We can we can fix up anything. It could be a complete uh, tear down and rehab, or it can just be some um, cosmetic facelift. We just want to change some small things to customize the home to you. So I want to I want to go over a few different trends here. So a little outdated. We never get the material live, but as you can see, this is from Zillow of what the sales inventory was. So you can see from 2010 all the way to 2018, the inventory of properties out there year over year has dropped. And being that we play in that space every day, it's definitely changed, especially with COVID, to where we're pre-approving people, and the homes are being sold in days and sometimes weeks. So uh, what that leads us to is only one person can buy a home at a time, right? So there's less people satisfied with what the choices are. And then what we're also finding in you know a similar period of time is people are figuring that out in part, um, and the remodeling costs are going up. So people are making the decision to fix up their property as well. And then the third trend that we tracked here um, is the average age of the homes that are out there. As we can see in 2016, the average, or 2006, the average life of a home was about 15 years. But fast forward to 2015, and now they're 28 years old. So you put those three together, and you have um, a smaller market of available homes. You have more people doing renovation, and I don't know if it's more of the do it yourself TV series that are out there, coupled with just older homes that are out in the market. It is creating a much bigger demand for the renovation loan, which, as we talked about last week, this is something that is an underserved market for us, and it's something that we try to use every opportunity that we have to get the word out. So we're going to go over a few slides here that break down what the benefits are for the buyer and for the seller alike. So um, the renovation loan, it offers a number of different benefits for people that are potentially looking to buy a home. The first one would be increasing the inventory of potential homes. So, and this deck is a little skewed towards the realtor, but I think the point still lies the same, where um, if we can if we can show the dream, someone might look at a house and say, "Oh, I don't like the way it lays out. I don't like how the light comes in. I don't like the carpet. I don't like the pink tubs, whatnot." Those are all things that, the sky's the limit as far as the creativity that you can bring into it when you're looking to buy a home. Another advantage that the buyer has is we typically see, if we have a home that we know has issues, the seller's aware of it too, right? They're either aware before they even listed the home, or they're getting feedback as they're trying to sell these homes that this needs to change or that needs to change, and it's forcing people to offer less, or them to have to cut the price of the home that they're trying to sell. So it's an opportunity, right, for the buyer side, to where they could pick up a home on a discount. Provides financing options for flawed properties in flawless neighborhoods, and that's, a lot of investors have this view, is, you want to find the ugliest home on the nicest block, right? So that definitely rings true here, and there's more slides into it as well, so I won't spend too much time. But in the loan process, if the appraiser calls out something that the property is subject to, we cannot close on a loan unless the seller fixes it prior to closing, or we have to do a renovation loan. So it narrows the field of people that potentially can buy a home. And where we see this a lot is if it's significant work that needs to be done to where the seller doesn't want to do the work, or it might be an estate, or it might be a bank. What we find is the main people looking to buy it are investors. And it's cash purchases, which they typically are not looking to ask as close to what the full asking price would be. So this loan allows people that don't have all that cash to be able to be more competitive in the space, or if they don't want to put that much capital into one deal, they might want to be buying multiple properties, and this renovation loan allows that as well. Overcoming appraisal challenges, I briefly touched on that as well. So, and then we're going to run through a few of the benefits for the seller side. One is just the time in which a property is on the market to sell, right? They might be in a situation where they have to get out, they need to get out. It might be job relocations, um, it might be health. There might be other issues that is requiring them to be able to get out of this property quickly, or they might just not have the desire or skill set to try to fix it, or the money, right? Because you have to pay a contractor or do it yourself, you got to buy the material. So and it goes right into the second bullet point here too. It just alleviates the time that it takes to fix whatever is being called out. They can say, "Hey, this is something you can take, and we'll give it to you at a discount for it." And then again, the appraisal issues on both sides. So, and then the last one here increases property credibility when compared to modern listings. So again, um, when we do the renovation loan, we get a contractor bid, or if a HUD consultant needs to come in, we get numbers from them on what the renovation is going to be, and we give that to the appraiser, and the appraiser appraises the property as if the work has already been done. So on this last bullet point here, where it talks about comparing it to what a modern listing is, a lot of the renovations that are going to be done are going to be bringing it up to 2020, um, for anything that might be outdated. So, and then the last segment that we carve out here, we got the buyer, the sellers, and the millennials. They did some statisticals for that group and that class, and what they find is it allows them to be able to get into a more affordable price point and maybe in preferable neighborhoods as well. So um, it also will fulfills some of their needs, and statistically what we're seeing is that there's a bigger sense of environment, more efficiencies, eco-friendly appliances, things like that. So these are things that a lot of homes, unless it's their newer homes, just don't come with these things. So they may want to put their personal touch on it and fix those things. Okay, so what I want to do now is transition into some of the features of the renovation loan. And I'm just going to throw them all up here. We can talk through them. Okay, so um, loan based on post renovation value. I briefly spoke to that. So we're going to get an after improved value on the home, which I always say to clients, if we're fixing the right things, then we're going to build immediate equity into the house, which is a good thing. Again, two is more geared towards the realtor, where they always ask, when do I get paid? And it's not after the work gets done, it's after we close, which is months before the renovation is done. Low first mortgage interest rate. There's a lot of different types of loans that are out there that try to do what we do, and what this is speaking to is it's one loan closing, it's one interest rate, it's one set of closing costs. So it's nice to people to where it's not like a credit line, it's not like a second loan, it's not a balloon. It feels a lot like just what a traditional mortgage would look like, a 30-year fix, for example. Okay. And here it speaks to it as well. A one-time closing here. It's not like we're gonna close on the purchase and then we have to reclose once the renovation is done. So it's not two sets of fees that are assessed there. I'm sorry. Yeah, right. Right. Yeah, and it seems like with all the different types of band-aid solutions out there, a lot of people that haven't done these loans are really confused about exactly how the process works. And then again, saving the deal with any problem appraisal. So, and just I guess to maybe make one more point on this, and this happens frequently, is um, we'll start a loan without a renovation, right? And it's someone that just wants to buy the property and they didn't preconceive anything that they want to change with it, and it'll get into the process to where the appraiser writes up his report and it says that we cannot close on this loan until X, Y, or Z are fixed. And based on the timing of it, the seller's like, I don't have the money, I don't have the time. Or on the buyer side, they're thinking to themselves, if I leave it to the seller to fix, are they going to spend the money and the time to repair this the way that I would, being that I plan to move into this and stay in the house? It's two different mentalities that are looking to tackle whatever the problem is that needs to be fixed. So this just allows us to say, as the buyer, I'll take that responsibility over. You don't have to worry about it, and I'll get it done. And who knows, depending on what the repair is, would have to get a bid, but it may open up the door again to maybe renegotiate a little bit and saying, hey, this is something that maybe we didn't know this to be the case when we first entered into the purchase agreement. And now that we know it, I think we need to lower the purchase price, or we need to give a bigger seller credit, or maybe a combination of the two. So I work with my clients whenever we're put in this situation to give them an opportunity to negotiate the most favorable deals for themselves. And sometimes this is an opportunity for that to come up. Okay, so I'm just going to lay out the two different types of renovation loans that we do. We do have more, and with COVID, we're not doing them right now, but these two we still are doing. And FHA, the 203K, is probably the most common household one that you hear. And again, it's underwritten on FHA's guidelines. And then we have the HomeStyle, which is Fannie Mae, and that's underwritten on Fannie Mae's guidelines. Okay, and then we're gonna compare and contrast here. I'm just gonna lay these out as well. So they both have subsets and they're similar in a lot of ways. We have the standard or the full, or we have a limited. Okay. And for companies that do dabble in this space, if they're going to do it, they're normally going to do the limited, not the standard or the full. Okay. So with the limited 203K, that's basically going to be um, around $33,000 worth of work and no structural issues at all. Okay. The home style allows us to go up to 50,000, again, with no structural issues. If there is a structural issue, regardless on how much renovation we're doing, they automatically tip over into the standard or the full. And if it is above those price points, then they go into to the full. And how I explain it to people that I'm just talking to initially is I tell people there's additional oversight when we get into the standard and the full. And the reason is from a lending perspective, it's considered a major renovation. And so we want to make sure that we're protecting ourselves as the lender in regards to this repair, but we're also wanting to make sure we protect the client, right? Because the client isn't going to be necessarily savvy enough to know if a contractor is doing everything the way that they would want it to be done to protect them as a homeowner. So again, we put an additional layer of protection on there, and that's through the HUD consultant. Okay. Um, I'm just looking through it real quick. That's briefly or basically what it's saying there. Yeah. Correct, correct. And my brother likes to joke and say they use that back and forth terminology for job security for us. Instead of just having one standard name that everyone would know, they mix it up and use different terms to where it can keep everyone a little confused. Yep. All right. So, and I'm just going to jump through this. The deck has some people inside the company that handle the business that we do. I would just note we have a lot of experts that support us in what we do that have got years of industry experience. As you can see, 22, 17, 17, and 28. And this deck is probably a year or two old. So it's even more than that now. And then here's us again. Okay, now let's debunk a few myths, okay? So, first one we have the loan is for blighted properties or structurally damaged properties only. That is a myth. All of our homes qualify for any type of upgrades or modernization. So, whatever you would want to fix, we have a renovation product for it. Now, typically the 203K is only going to address health and safety issues. Okay. If you're wanting to do landscaping, put a pool in, things like that, that's going to be more of the home style where it allows you to customize certain things. Okay. Second myth is this loan is too expensive. And it's often less expensive than what other financing options would be. And we're comparing that with like a hard money loan. We're looking at home equity lines. We're looking at um, credit cards. And a lot of times when we break down this, there are additional costs associated with a renovation loan that a traditional non-renovation loan would have. But if you look at the money that you put into for the equity that you would get out, again, going back to fixing the right things, the two do not even compare. Okay. Loan officers are not competent to do this loan. And you know what? To a certain degree, that might be fair. I have ran into all different types of situations, and we do a good amount of what we call rescue deals, where someone attempted it and just either they didn't know how to see it through, or the support that they had through their company didn't have the right tools in place to be able to see it through. So, and this goes for renovation and non-renovation alike. I tell people a loan experience is two parts. You have to have a loan officer on the front side that understands how to structure the loan, price the loan, navigate the loan correctly, but you also have to have a company that can fulfill what you're structuring and committing to up front. And if one fails, the whole process looks bad. For it takes too long to close, this we say we typically can do it in 45 days. I have closed renovation in 30 days. It really depends. There's so many factors out there, and I think with any type of loan that you're doing, it really comes down to transparency, communication, and setting appropriate expectations. I mean, I've had deals that have gone more than 45 days, but the thing that everyone needs to be appreciative of is what we do is we collect information and we validate the information, and if it fits into the parameters in which we lend on, then we will. And typically when there are delays, the delays come into play when there's other people that are not giving us the information that we need to be able to validate it. And so renovation brings in another layer of complexity in the fact that we're dealing with a contractor, we're dealing with the HUD consultant, and those people have to get us information that with a non-renovation loan we don't have to deal with. And if they're busy on other projects or they're out in the field and maybe they're not good clerical, right? They're not good at getting the data and the information together, that could cause a delay for us as well. This one says never close. I must admit, it's been years now, but I picked up a renovation loan. I was talking to a lady. I think she was in college in somewhere in Wisconsin, and when she came to me, she had been in the renovation process for over a year, and she was literally in tears. And I'm like, I don't even know how this takes place. So, and it had been a lot of picking it up and dropping it off and starting to try to get it done again and fall into the wayside. But it's something that I never try to get in this situation. I either see a clear path that we can get this done, or we don't. And unfortunately, we don't know everything up front. We try to collect as much information as we can, but certain things cost money and time to get, and we're going to figure that out as we go along. If there's things that I know that will keep us from being able to do the deal up front without spending time and money, I'm going to let the client know what we need to get past for able to move. What we need to get past in order to move forward. And as we're going through it, if we start to spend money and then we can't move forward, then I call it off. Like, this is what's keeping us from moving forward, and there's no reason for us to continue to spend time and money on this at this time. We need to fix this, and it might be the client, it might be the property, it might be a combination of the two. Yeah. Well, from hers, she she was in school, so she wasn't being diligent in getting the stuff in, and she admitted to that. She had some life events that came up that pulled her away. Some of the money she needed to close, she had to spend somewhere else. The contractors that had given her bids had flaked out, and she had to go find someone else. And so it was just a lot of unfortunate situations that can be real life. You know what I mean? Like, I jokingly and loosely use the term that a contractor is as good as their last job. And I know I might even offend some people that are hearing this, but I have had contractors on similar deals that clients have raved about. The work is good, the communication is good, the pricing is good, and then they're on another job and they're like, they're not showing up. I can't get them on the phone, and I'm just like, that is not what I know the person to be. But I explained to them, I said, you know, they get paid with the jobs that they're on, and they don't always know when the jobs are going to come in. So they may get in a position where they got a handful of bids out there, and all of a sudden they've got jobs coming in, and they're trying to juggle more than one opportunity at a time. Or maybe the subcontractors they hired out, maybe they got busy or they flaked out. Do you know what I mean? So there's a lot of things that we don't know, and unfortunately, the experience we may get one time may not be the same the next time. Right. And I would say, if there's one or two things that people get from this recording or presentation, is we cannot start the renovation until the client takes ownership of the house. You are not allowed to improve a property you do not own. And so that too can throw a wrench into things for a contractor as well, because if we're going under contract today and you've gotten a bid a few weeks ago, and then it takes us 30, 45 days to close, that contractor, what they bid it out, a month or two ago, the landscape in which their business is flowing probably has changed, and now we're wanting them to get started on the work and to be done, depending on the size of the job, within a handful of months. Sure. Correct. How can you have ownership without that being approved? When you say, what's that? Hmm. Correct. Yep. So, you know how when you set up an escrow account for your taxes and your insurance, um, those funds are collected up front when we close for future bills that we know you're going to have based on what the property tax bill is and what the homeowner's insurance is that the client provides to us. It's the same concept as the contractor gives us a bid and says this is what all the costs are going to be for us to do the work. We take that money, we build it into your loan purchase price plus the renovation. We park the renovation money in an escrow account. We close on your loan, you've now taken ownership of the property. So the purchase part of the loan is funded, if you will. And then the work begins. Contractors are paid on a reimbursement schedule, except for on the limited loans. So in that case, we would pay half up front and half when the work is done. And that's something that um, clients will come back to me on. So I know that they share it with the contractors, and certain contractors are like, nope, that doesn't work for me. Some are like, that's fine. I got my own credit lines or whatnot to be able to start the work on our own. But a full or standard renovation is paid on a reimbursement schedule. So the contractor is expected to be able to have the resources to get the project off the ground. Okay. And then when they're ready to get paid, then the HUD consultant would come out, inspect the work, and then tell the draw specialist in our company to cut the check. And then on the limited K, um, or the limited on the HomeStyle, sorry, both of them, they would get half the money up front and half when we close. Okay. Um, does that make sense? Or okay. And there we go. Too complicated. And you know what? I always tell this with, especially with the renovation clients, as I explain to them. My experience has been the more we over communicated on the front end, the smoother it goes on the back end. And I get it. You know, most people I'm talking to have never done a renovation loan before, let alone in a recent period of time. So even if they did a renovation loan years ago, it probably changed or they forgot how the process works. So I tell people I have no problem having the same conversation multiple times if we need to. I want them to feel clear and comfortable with what we're doing and in the process which we're going to do it. And again, even if I explained it and they tell me, yeah, I get it, but they really don't have a clue, when we get to the end, if their understanding of it or their perception of it changes, then they feel like in some cases that they've been duped or misled or something isn't clear. So I don't want anyone to feel like I need to move so fast that they don't need to ask all the questions that they need to ask. Because again, I never want someone to feel that way. I don't like when I feel that way, and I want that to be a relationship. I'm here as an advisor, as a consultant to you with the product that we have. We can do it a lot of different ways to meet your needs, but we have to have a clear and truthful line of communication on what you do understand and what potentially you don't. Yeah. Okay. Our renovation specialists simplify the process, and we try. Okay, and everyone likes a good before and after, right? So, would you buy that property or would you prefer to buy that property? And or do you have the vision, right? When you see this, do you envision this on the right? So, it, yeah, yeah. And it's fun. It's fun to see it. I always ask clients, I'm like, okay, I'm here to help you, but you got to promise me, you got to send me the befores and the afters as well, because that's the satisfaction that I get. Yeah. And then here's just a quick flow of kind of how the process works. And this, I'll point out what's just normal with the loans that we do. regardless if it's renovation or not. Everyone starts with a pre-approval. That just gives us a baseline of who you are as a buyer. The three main things we have to know: income, assets, credit. Okay. Once you're pre-approved, then we send it out to say, go find a property that you want to buy. In this context, we're talking renovation, right? So go find the house you want to go fix. You find something you like. What I do that might be unique to some people is I tell people, when you find a property that you're interested in writing an offer on, text me what the property address is and let me know what you think the budget is going to be. And then I'll update the pre-approval before you write the offer so you know what the monthly payment and cash to close would look like. Okay. Yeah, no one feels comfortable writing an offer and not really knowing what that's going to look like. And sometimes we don't know what the renovation is going to be. So I can guesstimate. And this goes back to the point of in the earlier slide where sometimes what we get into doesn't end up being what we thought it would be. And I'll give you an example. I just had a renovation deal that the guy withdrew. And the reason why is he estimated that it was going to be $80,000 worth of work, and it ended up being almost 150,000. And he was going to live in the house, but he was coming from a place of he wanted there to be a strong equity position, and what he had negotiated as a purchase price was, but based on the work that needed to be done just to pass health and safety, he knew what the market capped out as far as an after improved value, and he literally was losing all the equity in the renovation. So he walked from it. But I do feel like with my renovation breed, they're not down for long. They normally will come right back and say, you know what, I'm not going to move this. I'm not going to move on this deal, but I'm already seeing another one I like and want to know what the numbers are going to be on that. So um, sometimes, and I'm sure as an investor you've seen this, like you really don't know what you have until you get into it. So we try to move cautiously slow in some cases to where we don't want to run out ahead of ourselves and spend your money on things like appraisals and title, where we don't know what that if that deal is going to be something that can shape up in a term that you're comfortable with, or terms that you're comfortable with. So kind of speeding through over here. So we got the bid, it's accepted. Now I cannot order the appraisal, which we try to do upfront because an appraisal has the longest lead time in most loan scenarios, which can be, weeks out. Especially with COVID, it's definitely pushed them out more, renovation or non-renovation. But we can't order the appraisal without the bid or the consultant's SOR, their specification of repair, their report. And then it becomes a parallel process here where we're ordering the appraisal and we're submitting your file to be underwritten as well. And in a perfect world, we're getting our initial approval, and then we're letting the clients know, you the investor, what we need to collect um, to be able to close the loan. So our goal would be to have the appraisal come in time to where we're ready to submit the file back into the underwriter and have everything together to where they can clear the whole file, and then we would have what we call a clear to close. And when we have a clear to close, then we schedule the date and the time on where we're going to close your loan. So some things that once we close on it, your file goes to our draw department. A draw specialist is assigned to the loan. He or she sends an email out to the contractor, the HUD consultant, myself, and the client saying, file set up, we're ready to go. You guys can start the work. And then depending on how big the project is, predetermined with the bid, we're going to know how many draws are there, and then the HUD consultant or appraiser, if it's a limited 203K or home style, the HUD consultant is not involved in that, and the appraiser is the one that's going out and inspecting the work. Okay, and we just continue to do that until all the work is done and a final draw is made. And I think this might be a good point because I've talked about it a few different times and really haven't peeled back the layers on it. Um, a HUD consultant is required on all full renovation loans, 203K and HomeStyle both. The HUD consultant, using a sports analogy, is the referee. They don't really care who the contractor is that you pick as long as they pass all the validations that we have to go through, which is uh, a W-9, proof of insurance, 3 references, similar scope of work in the last year. Okay. The HUD consultant's numbers are going to supersede what the contractors are. We're going to use theirs, and they're going to give us what national averages are for labor and material costs. Okay, and the HUD consultant is going to work with the contractor to make sure that they're both on the same page with what those costs need to be. Okay. And then we just make some bullet points here of what's unique. The contractor's unique, the type of appraiser, the bid, the fees, the rate. So, and right now, as far as rate, it prior to COVID, I would tell people we were normally 50 to 75 basis points higher than what market rates were. But with the 203K, our rates are right in line with what a non-renovation loan is. Now, with a home style, the conventional version of that, there still is a little bit of a spread between the two rates. But I tell people it's risk-based lending in the fact that there's clearly more risk to to a lender for property that we're going to change, right? So that's why there's a higher rate, and there's always an opportunity if the rates are still where they were when we got into the loan. We can always look to do a rate in term refinance at a later date. Yep. So we need a minimum of 6 scheduled payments to pass before we can do the refinance. So, and I think you and I might have talked about this as well. I do get people that come to me and they're an investor and they're looking to fix it and, and flip it. I am not a solution for that type of investor. I'm more of a buy and hold, or if you do plan to flip the loan, you need to build into your carrying costs what that 6 months of payments are going to look like, and they are 6 systematic payments. You can't just do a lump sum, pay it, and then sell the property or refinance it. Okay, and this just goes into the 203K again. I probably won't spend as much time unless there's something, because I went through it a little bit, unless there's something that just jumps out to me that I want to highlight. We already talked about the as is appraisals, which makes us fix things. Um, we can do foreclosure short sale properties. Um, we don't have a problem with that. Yep, we can do modernizations. With FHA, you must live in the property at least 1 year. So, and here's another good distinction as well. The 203K is for an owner occupied. You have to live in the property. The home style is for our investor. And as of right now, we do not have a renovation loans for multi-unit investors. Okay, has to be single family. No, on the investor side, meaning you're not going to live in it, we can only do a single family home. Now, what a lot of our investors will do is they'll do the 203K, they'll do a multi unit up to 4, and they will reside in one of the units. And that could be a 2 unit, a 3 unit, or a 4. And when we renovate it, we classify it based on what the finished product is going to be. So if you buy a 3 unit and you're going to convert it to a 4, we're going to treat it like a 4. Okay. So with the 203K, I'm pricing out at sub 3. I've done some at 2.75, 2.875, depending on the the loan. We might be a little bit higher, 3.125, but still, I mean, very aggressive rates. Now the home style, I'm seeing myself being in the high threes, low fours. and there's ads in there. So even if we're talking like investor, it could be a little bit higher than that as well. So I have tools to where someone can call me and we can run through a hypothetical situation and I can let them know where pricing would be. Again, I don't want to waste my time or someone else's time. So typically when there's deals that don't get legs or don't go too far, it's normally cost and rate that will hang people up initially. So those are things that I like to get very clear on, um, just to make sure that uh, we don't get weeks into it and then they discover or figure this out and all of a sudden they're like, this doesn't make sense and I don't want to do it. Then people get upset. Okay. Um, yeah, so I get some people that will want to understand what the difference between the renovation loan and what a new construction loan is. As long as the foundation is there, it can be a renovation loan. If we're looking to pour concrete, it is a new construction loan. Okay. I basically say we can take it all the way down to studs and put it all back up. Hmm. Yep. FHA, we talked about it. I can do a 1 to 4 unit. Condos. Mixed unit I can do, but we cannot improve the commercial space. Hmm. Modular homes, loan limits. So with FHA and conventional as well, I just do a search because the limits can vary depending on the county and the state. So that's something part of your pre-approval. I'm making sure that we're not going to exceed it. If you with purchase price and renovation, if you exceed what the loan limit is for the county you're buying in, you are expected to bring the difference to closing. Okay. And then it talks about the standard or the full. And I briefly touched on it. People can pause the video when they play it back. This is just for the 203K, a breakdown of things that we can do and things that we can't. We joke, you can't build a tennis court, you can't do a gazebo, you can't do a mural of your favorite loan officer, no patios with fire pits. And then, mm, yeah, I talked about this. This is a good point here. So with the full or standard renovations, there's contingencies that are built into both loans, standard and full. And those are intended to where if you pop open a wall and there's mold in there or whatever, we have reserves to help cover those costs. With the full or standard, if we do not use all the contingency, you can do a change order and do additional work. With the limited, you cannot. And if there is any money left over from the renovation that we had, you cannot get cash back. They will pay your principal down. That makes sense? Okay. Okay. And this just breaks down the limited. So kind of the slides, what we've seen, we've been in the 203K, we did the full, and now we're in the limited. Okay. And again, I'm not going to go through them all, but people can pause the video and look at them if they want to. And then it does a little bit of a side by side. Okay. And then it goes into the home style. Talked about that. So the minimum's down. I didn't really explain that, and the slides didn't speak to it. So the minimum for the 203K is 3.5% of the purchase price and the renovation. Okay. For an owner-occupied home style, it is either 3 or 5% based on Fannie Mae guidelines. And if we're doing investment, it's a minimum 15% down on a single family home. And that's again purchase price and renovation combined. Um, I don't run into this a lot. I have one right now that we ran into it where, so on the home style, the renovation can only be 75% or cannot exceed 75% of what the after improved value is on the home. And so I have one right now where the renovation exceeds it by about 8 grand. So I'm going back to the borrower and to the HUD consultant saying, you guys need to cut somewhere to get it below this mark. And we have to cut the right things because I have to give the revised SOR to the appraiser. And if they were cutting things that were part of the value we got, then it's an egg and a chicken situation, right? We don't want to continue to go back and forth. We need to figure out a way to where we're just maybe buying lower end items, maybe reducing the contingency reserve. This one's got a 15, maybe we can bring it down to a 10. So yeah, the minimum credit score for renovation is a 620 score with FHA. Conventional, it just has to pass our desktop underwrite, which is normally above a 640 score, probably like a 660. Mhm. And here's just another breakdown of for the home style eligible properties, which I think I covered most of these. An owner occupied, I don't know if I actually spoke to this, but you can do 2 to 4 units as well, as long as you're living there. The investor is where you're stuck at the single unit. Here's some quick LTVs, loan to values. On the conventional side, again, we can go down as 3% as long as you qualify. For ineligible, they're saying the renovation cannot take more than 6 months. I did have one that was more than 6 months. We were doing a renovation in a historical district, and the city council had to approve it. So what I tell people there is ideally we're trying to be at 2 to 3 months if possible, a larger one up to 6, but we're not here to kill deals. If it makes sense and there's a reason why there's a delay, we're going to work with you. Okay, we're trying to do renovation loans. It's based on the overall project. It's not unit based at all. Okay. And here's another comparison here between the FHA and the home style, from occupancy to down payments to debt ratios. And then there's my Q&A. So there is a lot that go into it, but it's something that there is a system to it. So what I try to do is just let people know there's a product out there that is tailored for people that want to improve residential real estate. And we want them to be excited and to be confident that there is a product out there that can meet their needs. And we see all different walks of life. We see investors, we see homeowners, we see realtors, we see contractors. We see people that are in business in the trades that are looking for outlets in which they can sell their products and services to clients that don't have financing options. You know, so um, I greatly appreciate the opportunity and the platform to be able to share this with you. I'm excited for a follow-up Q&A. Regina, is there any questions or parting words that you would like to share? Yeah. Perfect. Okay. Well, I look forward to that opportunity. Any questions, you know how to get a hold of me, okay? All right. Thank you.